Hey everybody, welcome to today's training. I am so excited. Today we're going to show you exactly how to set up your charts, how to set up your watch list, how to put the right stocks in your watch list, and how to use them properly. So every day that you are trading stocks, every day you look at the stock market, you are expecting to make money, not because you're predicting, but because you know exactly what you're looking for. And today, the most important part of today is the software. When your trading platform and your charting setup is set up properly, it will literally give you the ideas. You actually have to work hard to mess it up. But there's a big difference between having your charts and your platform and your watch list and your stocks all set up properly and using it. Using it and having it is not the same thing. And I'm going to stay on top of everybody for this. So I want to welcome you to our 3-day challenge. This is day number 1, day number 2, and day number 3 is going to be on Thursday and Friday. And if you happen to be watching this on a replay or you're not happen to be catching it live, I just want to show you something real quick. The registration page for this is a link in the description right below the video. And there's a big reason that I want to talk about that today, because on day 2 and on day 3, I'm going to be giving away $6,000 worth of trading education on day 2 and day 3, which is Thursday and Friday. But you have to be in attendance to qualify for that. And the only way to be in attendance is to make sure that you click that link below and register, because we're only sending out the day 2 and day 3 to those who registered. This day, day 1, is going to be the only day that is going to be broadcast live on YouTube. But this video will be available to be watched through Sunday. And obviously, if you grab that link, you'll be able to see the replays. So we're only showing the replays to those who register. I want to be super clear about that. This is going to be 90 minutes of awesome sauce. I can't wait to get this across to you. We are going to go from top to bottom, to basic, to advanced, to stuff you probably know. Maybe you're not using it correctly, stuff maybe you don't know, putting it all together. I am so excited for this. I got like this big thing of water that I'm not leaving my seat for 90 minutes. That's how excited I am for this. We just have some amazing, amazing people that have been in our community for a while. And of course, John Bates, love to see you in here, pal, every single time. Good afternoon, my friend. Always a pleasure. Got some really, really nice people that have been in here for a while. So without further ado, I want to make sure that we hit the ground running. I guess the number one question I want to ask right now, and if everybody could pop this into the chat, is just let me know what software that you're using. And there's 2 different kinds of software. So if you could do me a favor, put them both in there. What trading platform are you trading on? And number 2, are you using a separate charting platform from the one that you actually use to trade on? So for myself, as I'm going to show you in just a second, typically I do a lot of scanning on FinViz and TradingView. I also use TradingView for charts. I'm going to walk through that today as well as scanning. And then I trade on TradeStation. So by the end of today, by the end of this video, you're going to take a lot of notes, watch the replays, come back for some more questions on Thursday and Friday. By the end of what we're doing, I'm going to walk you through to have your screens kind of set up like this, and understanding exactly what's on your screen, understanding exactly why it's on your screen. But probably the most important thing, understanding how to use it to make money. If you learn nothing else, again, there's going to be a lot of stuff we're going to talk about today. That write it down, get your notepad out. Is a big part of what we're going to be talking about. You must take notes, because implementation is different from knowledge. If you are around high achievers, the number one thing that high achievers have that everybody else is missing is they take action quickly. And you took action. You're here today. So that's awesome. I want you to know how much I appreciate that. But here's the goal. Here's my goal. My goal is, by the time we are done with setting up the charts, setting up the watch list, putting the right stocks into the watch list, you will know exactly what to do. And this is just as important, how the software, if put together properly, will point you in the right direction of which stocks to trade right now. Now, there's a big difference, and this is actually going to be the next question I'm going to ask. So let's get into some of the software. Let's see, FinViz, TradingView, Tasty Trade. I haven't traded on Tasty Trade. I've heard a lot of good things about them. Let's see, Thinkorswim. Probably 75% of the people in our community are trading on Thinkorswim. Let's see. Hey, Mark, thank you. Mark, thank you so much for being here. Really appreciate it. Fidelity, TradingView, and FinViz. Boy, a lot of people use FinViz and TradingView. Simon, how are you, my friend? Oh, another one for Tasty Trade. All right, awesome. John, TC2000. Okay, that's been around for a while, if I'm not mistaken, TC2000. MetaTrader as well. So I'm very happy that a lot of people are also using TradingView, because we're going to go through some TradingView stuff here today. Let's see, last one here, Randy. Schwab and TC2000. I actually think TC2000, correct me if I'm wrong, has some pretty good scanning capabilities. And I'm going to walk you through how I do some of the stuff that I have set up here, both from a watch list perspective and from a chart perspective. So the next question I have for everybody, and I want to see if kind of the balance is the same thing. Are you day trading, swing trading, or both? Just kind of give me an idea. Just type day trade, swing trade, or both. If you could put one of those in there, I want to get a feel for how much time I need to spend on various parts of the charting platform setup, so that I want to give you the most actionable stuff you can do right away. And by the way, I'm going to give you a really big list of stocks, but I want to show you how to first use it, how to set it up, and then we can actually break those down into smaller lists so that you know exactly which stocks to trade at the right time and which ones have the dominant order flow at that time. By the way, tomorrow, day 2, you really want to get in here, because it's probably going to be around 90 minutes again, same time of day. Tomorrow, we're going to break down order flow stacking and tape reading so that you know exactly what you're looking at. So when the software tells you to do something, then you can go over and have a trading idea and make that determination of whether or not it's a good idea. Now, something else I want you to write down today, very, very important. There's a big difference between a stock that meets the scan criteria from a stock that's a good trading opportunity. And a lot of people make that mistake where just because it went into a scan, you think you should trade it. Not so. If we actually kind of take a look at some of the ideas that have been unfolding recently, I'm going to use NVIDIA actually as an example, where the stock was up 10 days in a row into resistance. And the biggest question we need to get across is it a good opportunity right now? So as soon as you're about to hit that buy button, you have to ask yourself, what is the next likely profit potential for the risk that I have to take? So again, something else you want to write down, you might want to come back and take a lot of notes on this kind of stuff, is we need to first ask, is it obvious and is it a trade? Far too many people only ask the first question and don't ask the second one. So is it obvious and is it a trade? Now, how do you know if it's a trade? That's a lot of the stuff we're going to talk about when we're setting up the screens today, is determining how do we identify good ideas? How do we set the software up to tell us when those good ideas are unfolding in real time, which could be day trade or swing trade. It doesn't make a difference. And just so you know, probably 80% of the people in our community are swing traders. So maybe they have full-time jobs or they're running a business. I love the entrepreneurial mindset. And they're trading while they're doing those other things full-time, maybe holding stocks for a week to a couple of months, depending on how long the trade works out. We hold those winning trades with something called a profit maximizer. Hopefully you have something along those lines as well. So let's see. Let's take a look. Angelica, swing trading. Thank you for being here today, Angelica. Appreciate that. Jeff, both. Okay. T Brown, what's going on, man? Good to see you here. Thank you for watching. I know you've been coming to our videos quite a while. I appreciate that. Let's see. Sonali, trying to learn day trading and options. Whoa, Sonali, those are two really challenging things to learn first. Good luck with that. Let us know if you need any help with that. Let's see. Won't be able to do next session. The replay will be sent if you registered. So obviously got to make sure you registered. So good there. Let's see. Trade on interactive brokers, but use trading. Actually, Farah, I'm going to guess that means that you are international, because most of the people that are in our community who use interactive brokers trade through TradingView. And actually, if you don't know what we're talking about, I'm going to show you that on the bottom of TradingView over here, you can see it says trading panel. And when you pull up that trading panel, you can see a bunch of brokers that interact with or integrate with TradingView, and interactive brokers is probably one of the more popular ones. So you basically connect your broker dealer, and then over here pops up a trading window for you to trade on. So let's see. Missy in New Mexico, I'm going to assume that means swing trading stocks and options. Perfect. That's exactly what we do in our community. Let's see, James, thank you for being here today. 80 swing, 20 day. That's actually very common. 80 swing and 20 day. Let's see, Alan, trend trading. Alan, are you trend trading as a day trader or a swing trader? Because remember, you could still trend trade. It could be on a 5-minute chart if you happen to be trading on that time frame. Virginia, what a pleasure to see you here today. I hope you're doing well. Excellent to see you. I love that picture with your dog. Let's see, Todd Blanchard, thank you so much, pal. Thank you very much. Awesome to see you here today. Let's see, I'll just go through a couple of more here. Ride Red is swing trading. Okay, and Tom, swing trading as well. Okay, so what we want to do is we want to kind of give you the background of what we're going to cover today. It always starts with the direction that we're going. And before we get to that, it always helps me to know how I can help you better. That's really one of the biggest things. If you've actually never been in one of my coaching sessions, I'm kind of like anxious sometimes because I really want to help, but I need to know what I can help you with you personally. All of the help that we do on the coaching side of things is customized because you're required to ask questions that are either your biggest challenges, your biggest roadblocks, or even, kind of moving towards goals. Like maybe you're doing okay and you want to hit a bigger goal. That's a roadblock, right? So if you could do me a favor while I'm walking through this intro, type in there, let me know what you think is the number one thing, not 2, 3, 4, 5 things. What is the number one thing holding you back from succeeding in the markets at a much bigger level? The one thing. My wife says to me all the time, there's no such thing as priorities. There's one priority. So if we could choose one priority to work on, one big thing that's holding you back, what is that one big thing that if we could wave a magic wand, fix that for you and get that going? Let's maybe do that while we're on these calls for the next 3 days. So type in the chat, what is your one big thing? All right, so let's see. Oscar, John, me. I got to be honest, that was me early in my career as well. Scans for Oscar. Oscar, great to see you here today. Nice to see you. Hadley, lack of focus. Okay, Hadley, actually, today's going to be a good session for you because focus comes from being prepared. So that's awesome. Let's see. All right, let's see. Sticking to the rules. So I'm going to give you a little bit of suggestion on that. Sticking to the rules is easier when you realize how much it costs you when you don't stick to the rules. That's a big part of trading. Let's see. Tomfoolery, fear of loss. Let's actually answer that right now. It's easy to get around fear of loss when you accept the risk before you put the trade on. So Tom, this is going out to you very specifically. Raise your hand, and I know we've talked about this before. Raise your hand if you've ever put on a trade and as soon as it starts to move down towards your stop loss, you move your stop loss and you pull it out of the way. I've done it. I don't do it anymore, but I did do it. Why do we do that? We move our stop loss because we never accepted the dollar amount risk before the trade. So I'm just going to give you round numbers. So I have no idea what size everybody's trading account, but let's say that you're willing to risk $200 per trade. Whatever, however big your account is, it doesn't matter. You're like, that $200, I'm okay. If I put that at risk, win, lose, whatever happens, I'm okay. It's not going to ruin me, but it's sufficient risk to make some money if that thing moves in my favor, right? So that $200 admission prior to the trade, admitting that you're okay with a $200 risk is in the blink of an eye how you get away and overcome the fear of losing money because you already accepted the possibility of losing money before the trade, which again, if you're in my community, you're my coaching, you understand that a trading loss is a business expense. So you have to risk money to make money. Remember, there's no business in the world that doesn't have expenses. Every business does. And as traders, our expenses, including software, is our trading losses. It's the cost of doing business. So the fear of losing money is overcome immediately by accepting the dollar amount. So if you find yourself trading scared, you're probably trading too big for the amount of money that you can earn, or you just simply didn't accept the risk yet, and maybe you didn't think about it in those terms either. So that's actually kind of cool. That's kind of cool to get in there. Let's see, Mark, system timing. Okay, I'm going to work on that a little bit today. Kinner, holding on to losers. So that's the same thing as trading scared. We're going to get over that like right in a heartbeat right now, right? I'm going to tell you what I used to do when I had my trading floor in New York City. I had 300 traders at one point. I would actually joke around with people in the office, and I would stand up, and let's use somebody as an example. Let's use Simon as an example, where I'd say, okay, everybody, Simon has this one trade that he's holding on to. It's losing money, but he has to hold on to it because it's going to be the only trade he's ever going to be able to make money on. So he can't let go of that trade because it's the only trade he'll ever take ever again. And then when everybody crumbles up paper and throws it at Simon, Simon wakes up and realizes there's absolutely no reason to hold trades that aren't working. There's so much opportunity. You got to get out of the trade, got to look for another opportunity. And that's what today is going to be for. And I promise you this, and I don't say promise lightly, we're on video, so I'm saying it out loud right now, right? There is a very big difference between taking risk and accepting risk. Once you understand accepting risk is a part of the business, and when a stock goes down and takes you out, you just get out. When you control the downside, then you're going to gain enough experience to learn how to manage the upside. And my gosh, that's when trading becomes really fun. So if I could just do me, if you could do me a favor, type in the chat right now, just type in yes to let me know that we're ready to get into this presentation. Give me an exclamation point if you're really excited. I'm all jazzed up, and I haven't even had coffee yet because we just have so much good feedback from people in the community that there's just kind of like little stuff that they don't understand yet. And I will tell you the part that we're going to talk about today, the chart platform and setting up the watch list. And then, like I said, understanding how to use it. Gosh, that's everything. That is absolutely everything. All right. So Javier, thank you for being here today. Awesome. Oh, I like that little icon there. Let's see. Ovu Gray Aribin. All right. Thank you so much. Okay. So we're going to get into it. I want to respect everybody's time. You can tell how jazzed up I am. We got a lot to cover today. So I want to make this clear. There might be some advanced stuff that you might not know how to do in your charting platform yet. So we're going to walk through Trading View, which is a very basic charting platform, which, by the way, is an excellent trading platform. The cost and what they give you is just absolutely amazing. And the charts are really clean, easy to use. We're going to walk through setting up the charts. We're going to walk through indicators, why we use certain indicators, why we don't use certain indicators. You're going to find that I like to keep it simple. I don't want to think too hard when I'm trading. I just want to say, boom, the order flow's there, or boom, the order flow's not there. If it's not there, we go have a cup of coffee, go to the gym, come back, and wait for it to be screaming at us. So the biggest thing that I want to talk about is being prepared is the most important thing. And actually, I saw Anthony Zuno before. Anthony, your name scrolled through there. I want to say hello and hope you're doing well. All right. Okay, so let's start. Let's get started on the outline. I want to walk everybody through. So today is all about the chart setup and the watch list, but most importantly, using them. I can't stress this. Actually, you know what? I want to come back on the screen because this is such a big thing, right? You're going to get some information from me right now. We're going to walk through how to set it up. We're going to look at a couple of different charting platforms. This is what's going to determine who's a winner and who's a wannabe. And I know that's really, really strong, right? But I'm going to give you a suggestion that is based on years of experience. At some point, you're going to watch this replay. You're going to take notes, and you're going to have this big, beautiful notebook of all your notes in it, right? But what do you do with it? Do you actually spend a half an hour, 30 minutes to be prepared by setting up what we teach you today? That's the difference between success and feeling like you're always close, but you can't get there. It's because you're not taking the time to be prepared. When you are prepared, trading becomes 50 times easier because now you're not looking for something to do. As you're going to see today, the software will tell you if there is something to do and how much there is something to do. Now, one thing I want everybody to write down as well, this is really, really important. When you understand how to read the market, you will also understand the right kind of initial risk and the right kind of initial profit target. This is something that so many traders get wrong, where they think every single trade is the same trade. Nothing could be further from the truth. Quite frankly, some trades are amazing, and some trades are like, I can see that, maybe, but not necessarily awesome. Those are the things that we're going to talk about today. When you understand having your software, and especially your watch list, you want to write this down. The watch lists are a gold mine when you know how to use them. When you set everything up properly, they will literally tell you, look here, then go look for an entry. So again, I said it about 10 minutes ago. I want to say it again. Just because a stock meets criteria does not mean it's a trade. You then need to go and find, is it near an optimal entry? An optimal entry, we're going to get into a lot more as the week progresses, but the optimal entry is that moment that you're about to hit that buy button, how much is likely reward potential still on the table? So if we talk about the chart that I just showed you before, which was NVIDIA did not have strong likely potential after being up 10 days in a row and trading into this resistance. And look what happened today. So these kinds of little decisions are the ones that are going to make a gigantic, gigantic difference for you in the long run. So I want to make sure we have the disclaimer up here. Everybody could pause that, read that if they want. So here's probably one of the most important things that we're going to get across here today. Literally every single thing that we talk about, everything that I'm going to show you, every question you're going to have that we're going to go back and forth on, everything flows from having your software set up properly, having your chart set up properly, having your watch list set up properly, having the right stocks in your watch list, and then understanding how to use it based on how the market's unfolding. This is another thing you want to write down. Critical, critical, critical. That makes it so much easier, right? You need to adjust how you use the charts, how you use the watch lists based on the way the market's unfolding at that moment. Can't say it any other way. I'm also going to show you the differences between when we have a really obvious market condition and how to game plan for two different types of scenarios. So you can actually see that we have bullish ideas and we have bearish ideas. We have ideas that are in the news and we have ideas that have increased volume, which is institutional attention. So that list is a list that I give to my coaching clients every single night. So I'm kind of coaching you right now through the type of preparation that once the market opens, you already did all the hard work. You can go golf, you can go shopping, you can go wherever you want to go run your business because you did the hard work already. So being prepared changes everything. It could be 15 minutes. It could be a half an hour, depending on how much time and how much you want to put into it. Now, here's the big thing. The amount of preparation that is required is going to be dictated by the amount of stocks you want to watch. And I'm going to show you what that means in a couple of minutes. We're going to look at a monster list of stocks, and then we're going to break it down into the Dow. We're going to break it down into the Magnificent Seven stocks, and we're going to break it down into energy stocks or technology stocks. So the amount of stocks that you can process information from, and I'm going to show you how to do that with the watch list, that's going to dictate how much spare time you need to put into being ready. You could trade a giant list, you could trade a small list. It doesn't make a difference. It's the style of trading that you want that will match your lifestyle. You want to write that down. You shouldn't trade any strategy. You should trade one that matches your lifestyle because, look, isn't that why we're doing this in the first place? We're doing this in the first place to have the financial freedom. Everybody forgets that freedom part. The freedom part is making enough money from the markets to do what you want, when you want. Remember that. So don't listen to everybody. Listen to yourself and say, here's what I want out of the market. And then I'm going to build a trading business, a style of trading around the kind of lifestyle that I want my trading to give me. Really spend some time with that. That's the kind of stuff I do on the weekends with my notepad and a cup of coffee first thing Saturday morning. You'll be surprised how much good stuff you come up with in that downtime. Okay. All right. So let's get back into the presentation. So again, as I stressed this before, everything flows from this segment. Okay. Now we're going to get into software. The software is the main part of what we're about to go over. Again, we covered it before. If you happen to come in a little bit later, software, most people are using TradingView or FinViz or Thinkorswim or TradeStation. It doesn't matter. So here's the big thing I want to get across. Some of the stuff I show you today, it might not be in your software or you might not know how to find it yet. So don't assume it's not there. You might not be knowing how to find it and get in there and spot it. So most of what I'm going to show you, TradeStation, Thinkorswim, and TradingView, probably the three most common ones. Everything I'm about to show you is in those softwares. Okay, everything except there's one really advanced thing that I give to people in our coaching program, which is tracking change from the open from a very specific price. And I'll show you what that means. And like I said, that's kind of like really advanced stuff for our community behind the scenes, but I'm going to show it to you anyway, because I really want your wheels spinning about what's possible and how amazing trading could be when the software is set up properly. That's what we're going to talk about. All right. So don't forget, tomorrow is order flow and tape reading. And tomorrow is going to be the first day that we're going to start with the $6,000 giveaway. Okay. All right. So software, let's start to get into it. All right. High level coaching topics. So we're going to talk about this right now. And I want to make sure that we bring all this in. Order flow stacking, tracking the slow accumulation of capital allocation by the institutions. So before we even move beyond that, this is really a big part of what we're about to talk about, right? Nothing matters unless we understand why stocks go up and down. Now, we don't need to get into the financial statements today. We don't need to read earnings reports and revenue and expectations and guidance and outlooks, free cash flow and all those kinds of things. Right now, we're going to keep this high level, and we're going to make the declarative statement that the reason stocks go up or down is because institutions who have those big, deep pockets and teams of research, they decide that they like a stock or they don't. That is the order flow that makes stocks go up and down. Don't make it more complicated than that. As a matter of fact, to reverse that negative, say, keep it that simple. When you start to think too hard and you start to try and get smarter than the market, you start to get confused, you start to hesitate, and quite frankly, you're probably not trading with conviction. Your number one goal is to say, I know exactly what's happening. I know exactly how to know if it's still valid. I know exactly if it changed. Now it's just a question of understanding how to learn to manage trades. Once you have that roadmap for the market and you say, it's there and I'm going to go get them, or here's what I'm looking for and it's not there, and you choose to do nothing, that roadmap is everything. And that's what we're going to do right now. Okay. So order flow stacking is the first part. Tape reading is the next part. Putting the pieces together to determine initial position size, initial profit targets, and this includes sector rotation and the market internals. Now, that sounds like a lot, right? Maybe that's something you might not have done or used before, but that's actually what we have over here. So let me actually come off the screen here for a second. And over here are the market internals, and these are the major sectors. Once you have this set up, like, again, I can't stress this enough, the preparation is the hard part. I got a whole slide. I'm like a bam, one big slide. I'm going to point that out to you. Okay. So I want to continue. I want anything that's really important. I just don't want to gloss over it. It's really, really important that we get to the good stuff and you retain it. Okay. So next we're going to talk about money mapping between entry and exit, optimal entry, and the profit maximizer, right? So BEE, right? The B strategy. What happens between entry and exit is getting into a new trade and then how you manage that trade. So here's the big thing I want to get across, which is a fact. We could have 300 different people enter at exactly the same time and probably have 297 different exits. Some for a small loss, some for a small gain, some for a monster gain. Some people will hold on to the whole thing and even add. When you understand order flow stacking, which is probably unlike anything you've ever done before, then it's just a question of understanding that as long as you kick out your losses, you take the loss where you're supposed to, the next and biggest skill to learn, and this is important, is understanding how to make money. There's a difference between chart reading and trading. I teach people how to be traders. I do not want anybody to step up and say, I'm the world's best chart reader. You did not open a trading account to be the world's best chart reader. You opened up a trading account to get paid. That's what we want to do. Okay. So that's money mapping, right? That's in between the entry and exit. And then finally, we talk about the mindset of managing your passion, your profits, and your habits. Now, I don't remember who it was, but somebody before mentioned me. I think it was Johnny Lash, actually, when we talked about what's your biggest roadblock. He was honest. He said me. And look, the bottom line is I'm sure we can all raise our hand right now and say, you know what? I am the reason I'm not making enough money because I hold on to losers too long, because I get out of my winners too big, because I don't have enough share size when I'm right. I have too little share size when they're working out and I don't know when to add. That's all on us. That's managing your passion for the market. And by the way, I love talking about this stuff. So if I keep getting louder and louder and louder, it's because we're talking about something that's really important. But I just want to stress this again one more time. This is for you, right? This training right now is for you. And it's super important that you participate. Super important that if I say something that maybe you're just not 100% sure what it's about, and do that all 3 of these days, by the way. I want to make this custom. And by the way, on Friday, we're going to open up one of the forums for you to post questions in there, and we're going to kind of have a Q&A based on your individual stuff. So I want you to be thinking about today, Wednesday, Thursday, and into Friday. When I send you the link for that forum, what I want you to do is to really think about, if you had the chance to ask me personally, how do I get over this big roadblock that's holding me back? That's the one question I want you to ask for Friday. And we're going to send you the link for that on Thursday night. But remember, you have to be registered. So click that link in the description in order to get on that list. Okay. So I do want to talk about, Waleed's got a question here. Tape reading, level 2, and time and sales. No, that's not what I do. And I want to be clear about this. I got a lot of gray hair and whatnot. I did a lot of level 2 trading back in the day when it's almost 24 years ago now, where you were watching every single uptick and downtick and watching time and sales go by. But I was trading on a very micro time frame back then. And it was different. There weren't as many algorithms in the market right now, a lot less computerized trading. There were more specialists and market makers actually creating their quotes and doing those trades, and we're kind of tracking them. There was something back in the day called stepping up, where you were watching the specialist and trading with them. So I want to be clear here, Waleed. This is something that I teach very, very differently. I do not teach level 2 and time and sales, because the trades that I take and the trades that I talk to everybody in our community, we're not trading for the next penny. We're not trading for the next quick blip. We want to relax in our seat. We want to just hang out, put the pieces together, and then look for that next move and then learn how to manage it. Level 2 and time and sales is absolutely something you can learn, but you're not going to learn it from me, because I don't like to sit at my screen and watch every single tick up and down, up and down, up and down. It's just too stressful. I know there's a lot of people out there that teach it, and I'm sure they're doing a fantastic job at it, but I like stress-free trading. And at this particular point in my career, to me, tape reading. So Waleed, I want to answer this a little bit more fine-tuned for you. A part of tape reading is putting the reasons into the trade. So we kind of call that building an argument. So if you could, and again, I'm going to go back to Waleed. If you could think about what's going on in level 2 and time and sales, you're watching the trades go by. You're watching active buying, active selling, and you're watching what's called the prints go back and forth. So you're actually making distinctions on that micro time frame of what is likely to be the next move based on supply and demand, based on the institutional order flow. But you're kind of doing it on that micro time frame, and you're kind of like drilled in on that, and you got to watch every print. We kind of do the same thing, but we use a bigger picture, which makes the type of trading that I teach and what I call out every day in our daily ticker newsletter. I want it to be a little bit more, okay, I did my research. Now let's kind of see how this thing unfolds. So I want to be clear. A lot of people teach level 2 and time and sales as a part of what they do. I don't, because I want my trading to be a lot less stressful, and I'm probably playing for bigger moves. And I'll give you an example. We talked to somebody yesterday who's day trading options, and in and out, 0 days to expiration, a few of those kinds of things. And look, everybody has their own strategy, right? But from the conversation that I had with them, I said, look, if you're day trading on those micro time frames, you're probably cutting your losses, okay, but that means you're also probably cutting your winners. And he was like shaking his head, bobblehead back and forth. So these are the kind of things you need to think through. Is your trading stressing you out of your mind right now? Can you not leave your seat for 2 seconds? Or would you rather put a trade on and just let it unfold and sit back, relax, because you have the whole thing planned out already? After 24 years in the business, I'd much rather be relaxed, knowing what I plan to do and trying to capture the biggest gains that I can without having to be down on that micro time frame. So Waleed, good question. It's just not something I do because I like it. I like my trading to be a lot less stressful. Okay. Okay. So getting back into the presentation, managing your passion, obviously a big part of what we're talking about right now. So now, what I want to give everybody a heads up on right now, and this is very important, I'm about to show a whole bunch of bullet points here. When I'm done with these bullet points, I'd encourage you to take a snapshot of the screen, because these are all the kinds of things that you need to aspire to learn how to do and learn how to do them without thinking. Now you're like, oh my gosh, that list is gigantic, right? But let me ask you a question. How many things do you think, I'm going to assume a lot of people here drive, right? How many things do you need to process when you're driving a car? Probably 50, right? The car's in front of you, the car's next to you, stepping on the brake, stepping on the gas, reading the dashboard, putting on, whatever podcast you're listening to. This list is going to look intimidating. Don't let it be intimidating. Knock off one at a time. So take a screenshot of this when I'm finished with the screen. I'll tell you when it's done, because I want you to take notes on this. I want you to say, which of these things can I focus on right now to improve and make it be a part of what I do? So for example, when we are looking at this particular screen, it looks intimidating. It looks like there's so much going on here. But when you understand what to look at, which I'm going to show you in just a couple of minutes, that information gets processed really quickly and you know what to do with it. Same thing as this screen right here. There's a lot going on there, but when you understand what you're looking at, you're not reading it. You just, boom, I know what that means. It's kind of the same thing with driving. So let's get into this PowerPoint right now and all of these. So these are really important. So deeper coaching concepts. So kind of getting into coaching a little bit more now than just the charts, because remember, the mindset is what's going to drive that engine, right? Your edge, how you scan for your edge. This is a very big distinction. Profitable traders, consistently profitable traders, have an edge and scan for the edge. They don't trade everything. They're going out to the market and they're saying, I am looking for this. So let me come back and ask you another question. How many times have you said there's too much going on and I'm overwhelmed? Type yes if that's happened to you. Or if you've ever been overwhelmed, especially when the market's trading well, type in yes in the chat, because we're going to fix that right now and kind of working our way into that. The difference between those who are totally in control of what they do are only looking for something specific. People that are overwhelmed or find the market confusing, they're trying to look at everything. And because they're trying to process everything, instead of, if I said, look for the red VW bug, you'd find it in a heartbeat, because that's the only thing you're looking for, despite all the cars on the road. That's what trading an edge means. I want you to write that down. Those who succeed massively in the markets are only looking for their edge and let everything else go. I know what you're saying right now. You're like, but that means I'm going to limit my opportunities. How can I leave if I'm not trying to trade everything, I'm going to limit my opportunities. No. What's going to happen is you're going to start putting your money into situations that are better all the time because they match your edge, and your money's not going to be sitting in crappy ideas where you can put it into the ideas that have a higher likelihood of being profitable. So the better your focus, the greater the chances that you can master that edge and you will concentrate better. All right. All right. Next, trading your edge with real money. This is probably a big pet peeve of mine, is trading with a simulator. I am not a big indicator. I'm not a big person who likes to trade on simulators. I want you to feel your heart bumping. I want you to be like, yeah, I got to manage this thing. I got to pay attention. I don't care if you're trading 5 shares. Trading with real capital is the only thing that matters. You will never, ever, ever, ever pay your mortgage with simulated profits. Ever. Okay? So if you start to trade and you start to use some of the stuff that we're talking about here, and we're going to get into all the nitty-gritty in just a second, it's critical that you have real money on the line. I don't care if it's 5 shares, because you need to see how you're going to react and whether or not you actually act the way you planned. And the more you do that, your share size goes up, your conviction level goes up, and every day you love the market more and more. That's my hope for you. Okay? All right. Real money, entry setups, entering at the optimal entry, how not to buy too late. So again, coaching topics, right? How are you doing right now with buying at the right time? Do you know when to buy at the right time? Remember, Friday is going to be a coaching session, so you need to be thinking through right now, what is the single biggest challenge that you have? Is it finding ideas, entries, managing profitable trades, taking losses, conviction? The more specific you are for Friday's coaching, the easier it's going to be for me to give you an impactful answer that will help you right away. All right. So a lot of people have a problem with entries, and we talked about that today with, again, I'll keep going back to NVIDIA. This was a poor time to enter this trade simply because of what the stock normally does. Okay, and I can walk you through what that looks like on the setups as we continue to move forward. Okay. All right, position size and reading the market. This is critical. All right, this is really, really important. The better job you do of understanding how to read what's going on in the market. What does the market look like? What do the sectors look like? What do the industry groups look like? And am I near an optimal entry? The more of those pieces you have in front of you at that moment, you're going to adjust your position size up or down based on how much information you have. So you want to write this down. This is really important. Am I building an argument for accepting risk? So what does that mean? Building an argument simply means how many reasons can you put into the idea to say, yes, this makes perfect sense, and I expect this thing to follow through in the direction it's already going. Is it one reason because it popped up in a scan, or is it 7 reasons? Do you have, and let's go back here, do you have a bunch of reasons that could tell you right now this is a fantastic idea? What is the advanced decline line doing? What is the New York Stock Exchange tick doing? What is the VIX doing? What is the S&P 500, the NASDAQ, the Dow? Are there any specific sectors I could be leaning into? When you start to put those pieces together, getting back to what we said before, that's a part of tape reading. So position size needs to be adjusted to the way that the market is in that moment. So what do you write down there? Every trade is unique. Every trade requires different position size. That's a fact. Some are bigger, some are smaller, some get out quicker, some of them add. That's going to make a big difference for the right person who understands that. I hope it's you. Okay? All right. All right. Reading sector rotation, how secondary indicators like the market internals will affect your decision. Do you have the market on your side? Do you have a sector on your side? Do you have secondary indicators on your side? I'm going to show you what some of those secondary indicators look like in just a second. Okay. All right. Spotting small distinctions that matter in the moment instead of after hours. So, for example, if we kind of take a look at this, which is a screen of various sectors, and I'm going to give you all of these stocks in just a couple of seconds. When you're looking at this screen, is there a dominant side? Is there a dominant list? And by what percentage is that list dominant? So what do I mean by that? So you might have 7 technology stocks that are strong or green from a certain perspective, right? But you might only have 2 of those 7, 2 out of the 30, right? You might have 7 green, but only 2 of them are positive by at least 1%. That's not as deep as the 7. So you see those small distinctions versus you might have 15 stocks, 10 of them are green, and 10 of them are up by at least 1%, 1% from yesterday's close and 1% from today's open. Now getting back to tape reading, we're stacking the argument. Sounds like a lot, right? It's not. This is the point. Once your software is set up to tell you that, it's already in front of you. It's just a question of saying, boom, hit that button, tell me which stocks are doing what I should be paying attention to right now. So again, if this is new to you, I want you to get excited. I want you to get ready to take notes. Everything I'm showing you right now, and especially what I'm walking you through in the kind of the mental preparation for this, I promise you, the more you spend that extra half hour to set this stuff up, it won't take you long to understand what you're looking at. And is there any greater feeling in the market than feeling in control? The mistake that people make is react to price instead of saying, I know what I'm looking for, and then looking at the screen and saying, is it there? That's the control you want, because the more you see that, the more you do, the more you make better distinctions, the easier it's going for you to do profitable trades and have them with conviction. Preparation is everything. And I think I have one big slide that I'm going to show you on that in just 1 second. All right. Okay. How to find market leaders while they are leading. This is a big deal. Certain types of stocks move with the market better. So there's something I want you to write down. It's called beta, B-E-T-A. Beta is a measurement of a stock's correlation to the market itself. So stocks with a beta of 1 or greater have a very straight up correlation with the market. So when we get good at reading the market, we get good at putting these pieces together, and the market is obvious. We put those two pieces together. You then go to trade the stocks that match what you've learned to do in the market. Now, we get a lot of questions about why do we trade stocks instead of trading the S&P 500, for example? The answer is very simple. The percentage gains on individual stocks is astronomical compared to the individual ETFs or indices. They move, but when's the last time you saw the S&P 500 go 40% in 2 days? Not going to happen. It's not going to happen unless something catastrophic happens, and hopefully that will never happen, but you get the idea. So I want to write this down. Read the market. You should already have a list of stocks to trade. I'm going to give you that list in a second. Okay. All right. So let's continue and get into the next part of this. All right. Taking losses, working positions, and building positions. So let's talk about this right now. 3 different scenarios on the same trade. How do you take a loss? How and when do you work that position? And how do you build positions? You need to know this beforehand. And again, if you've never seen this before, actually, let me come back for 1 second. If you've never seen this before, it's simply pre-building how you plan to work that trade. Now, there's a couple of other parts of that. There's average true range, average true move. There's what the stock normally does, all those kinds of things, relative volume. There's a couple other things you want to put into the trade. But by the way, I do all this for you. Don't worry about this. I'm doing this all for you right now. You can actually find beta on FinViz. There's a little thing in the bottom left-hand corner. Let me actually point you in that direction because you actually have it on the screen right now. If we go into a screener and you open it up, right over here is beta. So if we kind of zoom that in a little bit for you, you can actually see what that means right there. So look at that. That's exactly what we were talking about before. Software you're probably using, but maybe not with enough depth to actually get in there and use all the assets. So thank you for that question, Pat. Appreciate that. So it's right there. You can actually see the definition on there as well. Okay. So let's actually clarify what we just said. When we get good, when we set the charts up and set the market up and get good at reading the market, which is a part of tape reading, very simple, right? When you read the market, you should then already have a list of stocks that are doing the same thing as the market. And that's where we'll get bigger percentage gains. So you want to write that down as well. Okay. I do not trade crypto. Just full transparency. I have not put 1 penny into crypto. I do trade crypto stocks though. We trade Coin, Riot, Mara, MSTR, all those crypto related stocks, but I don't trade crypto. I want to be super clear about that. I'm a stock trader. All those books back there are stock trading books. Okay. Good question though. I appreciate that. Okay. So let's continue with this big list. Remember, I told you I want you to take this list and take a screenshot of it. Understanding when to take quick profits, when to hold winning trades longer, and when to exit a winning trade. So again, something that's crystal clear, important here. How do you know if a stock pushes and pauses, if it's the right time to get out or if it's the right time to add? I'll give you a little clue. It's right here. It's right here. And when we set this up for you today, you're going to understand not only how to set it up, but how to use it to answer the question that we just had, which is how do you know when to take quick profits? And again, let's actually, look, we're friends, right? Let's talk about it. How many people have ever gotten out of a good trade too soon? We all have at some point, right? Raise your hand if you've ever got out of a winner and you didn't have enough share size. We all have, right? Understanding the conditions and stacking the reasons, which is in the chart setup, stacking those reasons to expect follow through or not finding any reasons, say, you know what, this is a pretty good profit, but there's not really a lot behind it. I'm just going to take the cash flow, go to Starbucks and hit the road because that's all that's available right now. So you want to write this down. What's available right now? The only way to know that is to have the chart set up properly. Okay. So let's continue. All right. So again, I want you to take a screenshot of this. I'll tell you when it's done. We're almost done there. We've got maybe a couple more in there, right? This is very important because you need to be asking yourself these questions. All right. Next, how do you deal with adversity and how do you deal with success? Believe it or not, and I think probably most people on this call will actually probably admit that they probably get sloppy in their risk when they're making money, and when they have losses, probably need a little bit better way of handling getting back on track. And that's a big part of it. So again, these are coaching topics that I talk about in the community, but I wanted to share them with everybody today. Trading bigger, when to trade smaller, and when to be in cash. So let's actually talk about that now. Do you currently have your software set up? Do you have a trading system that tells you maybe nothing's going on right now? And do you do nothing? And is there certain situations where you're like, you know what, this is pretty good, but I'm not really going to size up. Maybe just that one stock is doing good. And I want to give you an example. We talked about that this morning. Let me hop on over to the charts again. And let me pull this up. So a lot of the stocks that we pay attention to in the solar group have kind of been getting beat up. They're rallying a little bit recently, but you can see for the most part, they've been down, right? So you got FSLR, you have ENPH, bouncing a little bit now, but for the most part, getting beat up over the last 6 or 7 months. But then you got one stock like this, JKS, which is actually fighting it. So here's how we use that information. Most of the bigger stocks in the sector are going down. This one stock is going up. So based on reading the order flow there and then putting the sector in, we're coming up with a decision that the sector is not really awesome, but that one stock is. So when you make that distinction, and again, your software is going to be set up to show you how to do this. It's going to tell you when it's set up properly. Based on one stock versus the rest of them, you could still take the trade. But for me personally, I'd have a little bit less capital in the trade because it's not perfect. But if the market was going up, the sector was going up, the group was going up, and that stock was going up, I'd be like, wow. You'd hear me say, belly up to the bar. There's something to do. And we get in there and be a little bit more aggressive on the position size and how long we trade it, which would translate into a different profitable trading strategy. So there's different types of trailing stop losses depending on the quality of the idea. Well, how do you know that, right? How do you know which one to use? It's here and it's here. It's very similar to driving. Once you understand how to use what's on here, trading becomes much, much easier. So when do you trade bigger? When do you trade smaller? And when do you go shopping? That's the big part, right? All right, let me get myself off the screen there. Proper capital allocation based on the quality of the idea. So these two kind of tie into each other, where the better the idea, the better the trade. So something that I want you to write down, very important. The real risk in the trade is the quality of the idea. Write that down. So your job, if the real risk in the trade is the quality of the idea, what does that make your job? What does that mean for getting profitable with consistency, to see your account go like this every month? It means your only job is determining what's a great idea and a great entry. See how easy trading is when you kind of lay it out like that? It's not complicated, but you need a path. You need to be looking at and doing the same thing every day. That's where the consistency comes from. You could write this down. The consistency that you're searching for in the market can be found in the consistency with which you follow your edge. Your goal is to let your edge do the work. If you are stressed out of your mind and sweating and nervous, you're working too hard. You just haven't understood yet how to put great ideas together. And obviously, this is what I do for the community and the newsletter and the research and all that kind of stuff. So we have the coaching and we have just the Daily Ticker newsletter where I'm giving you all this stuff every day. So the whole point of the newsletter is for you to see my thought process to understand how to put those trades together. So we got one more bullet point, and then I want you to actually take a screenshot of this, okay? All right. The last one here is what would help you lose less and what would help you earn more. So what I would love to see you do right now in the chat, what would help you lose less? Let's go with that first. What would help you lose less money? Let's get an answer to that. And Jesse Livermore, we got a big, everybody should have a reminiscence of a stock operator, right? Jesse Livermore said he made a big list of what does not work and everything else was his strategy. Let me repeat that. He made a big list of what doesn't work. So I'm going to ask you one more time, what would help you lose less? And then what would help you earn more? Let's see, Tom, having a plan, 100%. I agree with that. John, consistency. So remember, consistency comes from how you follow your plan. There's no doubt about that. Lose less, better preparation, and not whale hunting. Wow, Thomas, that's great. I love that one. John, yeah, absolutely. Kick those losers out. No reason to have them in there, right? Perfectly timing entry and exit. Okay. How far to place my stop loss? Okay, that's a good one. And on that one as well, how to place your stop loss. Very important one on the stop loss. The size of the stop loss should dictate the amount of shares, because once you're willing to risk a certain amount of money, then the distance between your entry and your stop loss tells you how many shares. So when you have the right share size, it's much easier to trade without stress because you're not leveraged and going crazy. It's a very important topic. Let's see, Gavin, taking the trades at planned for. Absolutely. So right now we're talking about what would help you lose less. Okay. Let's see, when to get out. So Gabrit, that's actually something that's relatively easy, and you're going to find that out over the next 3 days because we're planning for it. Let's see, what would help you lose less? Predicting the future. I don't know anybody who can predict the future. So Aldo, maybe we can hopefully convince you that that's not really what we need to do. Let's see, Archie, putting in your stop. Absolutely. Mark, exit discipline. I agree 100%. So now we're going to go to the other side of the market. Thank you, Christian. Appreciate that. So the other question was, what would help you earn more? Now, it's kind of interesting. So please do me a favor. You can actually take a screenshot of this. When we put this up, take a screenshot of this. It's very important to have this whole thing. So what would help you earn more? Well, let's put some of the pieces together in here, right? Number one is having an edge. Number two is getting better at position size. Number three is reading if sectors are in the same direction of the market. Next is making small distinctions when they're happening. All of these things go into holding longer and making more. How to find the market leaders while they're leading, the right type of profit, dealing with getting knocked down, dealing with success. Out of every single thing on this page right now, I'm going to tell you right now, this is probably one of the most important ones right here. These 2 bullet points, trading bigger, when to trade smaller, when to be in cash, proper allocation based on the quality of the idea. Make sure you take a screenshot of that right now so that you have it. It's very important that you have that. So here's the big thing I want to get across to you, and this is going to shock some people. It's that important. We get people all the time coming into our community talking about, what's your win-loss percentage, dude? I don't care. I honestly don't. Real traders focus on whether or not they made money and how much their account went up. I can make the same money as somebody with a 90% win-loss percentage by, even if I'm all the way down at 50%, if I have the right share size and bigger share size on better ideas. The win-loss percentage is not like this smooth moving line that goes up like that, where it's got to be 90%, 100%. It doesn't matter. When you understand everything that's on that screen that I just showed you, and hopefully you took a screenshot of that, I'll put it up one more time. Having the right share size, meaning scaling back when it's not perfect and scaling up when it's better and holding longer, will make your trading so much less stressful, because if you're doing it right, you are working your way into a profitable position and you capture this big move as opposed to capturing that little blip and getting out before it gets taken away. When you understand how to read the market and you put these pieces together, everything to help you make that decision is right in front of you. Everything. Okay, so I'm going to put this up on the screen one more time. I want you to make sure you take a snapshot of that. And again, I'm telling you right now, these right here, game changing, assuming you have an edge. Okay. All right. Now put this in big, bold red letters, right? I want to scare everybody into this one. Preparation, being prepared works, predicting doesn't. Now, for everybody that might want to like shoot a hole in that, or, kind of be like, that doesn't matter. You're full of beads, right? Let me ask you a question. If we want to make money reliably, can we rely on reading the market and following what it's already doing and just having steps in place that tell us it's still valid or it changed? Can we rely on that? Versus I'm going to predict where this thing is going to be in a month from now, and it's going to be over there. Nobody can predict. You doubt that? Start collecting headlines of people saying where stocks are going to go the next day, and the next day, and the next. You're going to see that they're going to say one thing on Monday and something different on Wednesday. And you're going to see that everywhere. You know why? Nobody can predict. The great traders, the traders that make the most money, the traders that have the longest career, the traders, hopefully you, the toughest thing is focusing on what's going on right now and just having a set of rules. So that's what preparation is. Preparation is, I know what I'm looking for, and I know if it's there, and I know if it's changed. Raise your hand if that's dramatically different from what you've been taught. Dramatically different. Predicting is not necessary, and it makes it a lot harder. And you know what? You want to know what the biggest problem with predicting is? Then you start to believe that you are right because it moved in that direction. That's not what trading is. Trading is about putting the software together, which we're about to do right now, and then letting it tell you, here's what's going on now, and then letting it tell you if it's still happening, and then letting it tell you if it changed. It's the same exact thing as driving a car. Okay, open road. Okay, got to change lanes. Okay, it's raining. Okay, I'm in stop and go traffic. Okay, it's wide open again. That's what trading is. You're not predicting what the car in front of you is going to do. You're simply driving. You're simply paying attention, and you're making adjustments. You're making adjustments up and down in position size. You're making adjustments up and down in profit-taking strategies. Maybe it moves against you quickly. And you know what? Kick out some of those shares. You got 1,000, get rid of 600 if it's not doing what you want. Scale back, get your head back, and then look to put that back on if it starts to move in your favor again. This is the fun part of trading, because this is really now we're talking about I'm in control. You're in control, not the market. This is on you. This is the biggest. This is the most exciting part for me, because I want you to understand that success in the market is up to you, not the market. It's how you choose to interact with the market. Can't stress that strongly enough. All right. So let's continue. We got through preparation. Now we're going to get a little bit more into the actual chart setups, right? So what we're going to talk about now is building out the core candlestick chart. And I'm sure a lot of people understand, maybe even have that already on their screens. Then we're going to expand to stacking the order flow. We're going to get a little bit more in depth, both on stacking the order flow in the sectors as well as in the individual watch lists. We're going to add a couple of indicators. I don't use a lot of indicators, but we're going to set them up. We're going to look at day trading VWAP, and we're going to look at swing trading anchored VWAP. There's a book out there that I'm sure everybody has bought. I'm going to show you that book in a second. Really, really good book. All right. Next, we're going to talk about building out the watch list and how to use the right stocks in the watch list. And we talk about watch list basics. It's building out the watch list and using the watch list properly. Two very, very different things. Okay. All right. So the core candlestick chart. Now, I'm going to say that most people probably have a pretty good idea, but what's the biggest thing you probably noticed on this chart right now? I don't have any indicators. None. I want it to be simple. I want it to have conviction. We're going to talk about the few indicators that I do have, but the very first thing that I want to do when that day ends, and let's just say for argument's sake, I'm looking at stocks in the Dow Jones, I'm looking for stocks that I can say, is something obvious? Are we at or near an optimal entry? Way before I even look for an entry. So here's the big thing I want you to write down as we're getting into this. It has to be obvious before I look for an entry. So many people have that backwards. They put on a trade and then they hope the market does what they want it to, as opposed to it's already doing what you want it to, and you're just kind of like catching a ride at the right spot. Think about that. I'm sure you've done that. I know I did that early in my career. All right. Okay, so let's continue to get into the outline of what we're about to talk about, which is the core candlestick charts. Now, I just want to ask you a favor. If you've been trading for a while, I'm just going to walk through candlesticks. And if this is new to you, great, take notes. If you've been experienced, just have a little bit of patience, because I want to make sure that I touch everybody with the right amount of information at the right time. So the core candlestick charts start out with the basic stuff, right? Let's actually zoom this out. And actually, usually, we're going to stick with this one. We're going to stick with this chart here. Now, on this chart, and I want to make this super clear. We're going to first talk about what the candlesticks are. Again, bear with me if you're experienced and you know this. I promise it's going to be worth your time. So when a candle is green like this, right, we call that an energy candlestick. There's only two types of candlesticks that you need to know. There's literally probably 600. There's probably 600, right? The only two you need to know are energy and indecision. Write that down. Energy candlesticks or indecision candlesticks. So if we could take this all the way back to what we talked about at the beginning of the call, which is institutions are moving stocks back and forth. Energy means institutions are dominant in that stock. Indecision, what we also call a melted candlestick, means that there's no bias. So think about this, going all the way back to the question before about time and sales. When you learn to read candlesticks properly in just two setups, that's all you need out of everything. So again, we want to keep simplifying so it's easy to use. Energy or indecision. So now that you know that, energy is a big-bodied candle. Indecision is a small-bodied candle. So it opened and closed in basically the same place. Energy means there's a lot of separation. Right there alone, that was probably worth the entire time you spent with me so far. We just boiled every candlestick down to energy or indecision. So when I pull this chart up, you're like, oh my God, I can't believe that's so much easier, right? So if you take a look at this now, can you see anything other than indecision or energy? Indecision or energy, energy, indecision, energy. Like out of nowhere, the whole thing just kind of falls into place now. But now the next level of that on a basic candlestick chart is to just completely understand what's going on. So if it's green, that means that there's separation from where it closed to where it opened. If it's red, there's separation from where it closed to where it opened. So if it's red, it closed below the open. If it's green, it closed above the open. If it's a melted candle where the open and close is tight, that means that there's indecision. So do me a favor, and let me ask you something now. Does that help simplify candlesticks for you? Again, we're talking about setting the charts up and understanding how to use them. Our number one job is to say, is it obvious? How long has it been obvious, right? So what we just taught you is out of everything you can look at without any indicators, energy or indecision. Energy means somebody's in charge. Indecision means nobody's in charge. Do you think you can use that information to trade smarter? We're just scratching the surface of the stuff that we're going to get into right now, all right? So let's continue with the PowerPoint. I want to make sure that we get into it. So that's the core candlestick. Next, we're going to break it down, scanning for something called separation. Now, this is where it gets really, really exciting. Now, a lot of people, when they run their scans, generally speaking, they'll look at it, where is it from yesterday? They'll say, yesterday it closed at 50. Today it closed, right now it's at 51, for example. So it's up $1, right? So they might look at it and be like, wow, that stock is strong today, right? Or maybe that stock is strong this week. Not always the case. There are ideas that are actually positive from yesterday, but have been selling the entire day today. So I don't care if you're day trading, swing trading, monthly trading, earnings trading, it doesn't make a difference. What I'm about to show you to start scanning for is a term called separation. So remember what we just talked about, energy versus indecision. The very first part of setting your charts up and setting your scanning up immediately is to know which stocks have a lot of energy right now in the time frame that you're trading. I'm going to say that one more time. You want the software to tell you which stocks have the most institutional attention, dominant buying pressure or dominant selling pressure in the time you plan to hold the trade. And that's a software setup. Like that, you can have the software tell you that. Now we're going to go to Trading View, and I'm going to show you how to do that. All right. So let's actually pop into the Trading View software and the scanner part of the software, which again, if you go on the bottom over here, the scanner right here, it says Stock Screener. You're going to click on that, and then we're going to click over here. And we're going to open it up. So let me zoom this in a little bit because this is the most important part. So we actually had some people that were day trading or swing trading. So I want you to focus over here. Okay, now this is really, really important. And the thing I want you to write down is change from the open. So if you're day trading, swing trading, holding a trade for the entire month of November, this is a super ninja software setup. Okay, we're now talking about how it's trading from the current hour. We're talking about how it's trading from the current open. We're talking about how it's trading from Monday's opening price. We're talking about how it's trading from November's first opening price. We're talking about how it's trading since the earnings gap. Remember we talked before about tape reading? When you understand what I'm showing you right now, and I'm going to break it down a little bit more, the concept of separation is going to become your new best friend, because when you have your software scanning for separation across stacked order flow, so in other words, separation from the day, the week, the month, all of the, remember we said all the arguments, the more arguments you can put into the trade, the better. When the software does the heavy lifting, everything becomes easier, because now you're not all over the place. You're not overwhelmed anymore. You're just like, boom, I know exactly what I'm looking for. And I'm going to show you how to break that down even further to make it super simple based on how many stocks you want to watch. Remember what I told you before. You want to build your trading business around the lifestyle you want to live. Don't just trade the way everybody else trades. Trade the way that you want to trade. Trade the time frame you want to trade. Trade the activity level that you want to trade, not how anybody else dictates. Again, you take nothing else out of this. You want trading to be the reason you're enjoying life to the fullest. And that comes down to doing what we're talking about right now, is setting the software up. So I want to walk you over here to this right here. So what you can see there is that is change from the week. Change from the week. So change from the week is telling us what that stock is doing on that weekly candlestick. So if we kind of work our way over to change from the open percentage, and we sort this column by the week and change from the open, this now is sorting all of the stocks that have giant weekly green candle separation. And if we do it in the opposite direction, we now have all the stocks that have giant red weekly candles. Okay, very, very important. So Vikram, we're really just focusing on this top one right here, because this is the week and this is change from the open. So now here's where it gets really important, right? This is where it gets really important. That's the open from, let's say, the hour. That's the open from today's open. That's the open from Monday's open, right? So that's a very raw filter of show me energy. Show me dominant side of the market right now. Raise your hand. Does everybody see, like type in yes. Do you starting to see how all of we talked about up to this point, if we didn't have the context to understand institutional order flow, and institutions are the ones that push stocks around, doesn't it make sense that we want the software to tell us when the institutions are doing something in the time frame you plan to hold the trade? This is kind of really fun, isn't it? So if we kind of work our way backwards, that's the weekly change from the open. So we kind of work this way and we start to look at some of the weekly charts. We can see that the percentage change on that weekly chart is pretty big. So how do you use that information? Remember we talked about at the beginning of the call, it's very important to understand having the information is cool, but using it in real time is even more important. So let's go back down to that scanner and let's put it in there by the day now. So if we change this today, these numbers are all going to change to different stocks. And if we click on these stocks are now going to show us ones that have a lot of energy today. So can we all be like, that is not, I mean, how cool is that? If we know that we're looking for a dominant side of the market, we boiled all the candlesticks down to energy or indecision, and we know that we make money when there's energy, and we want to be a buyer, doesn't it make sense to let the software tell you these stocks are doing that right now? Let everything else go. So you see how I was saying before that focus will actually help you make more money, because your ideas are going to be in better ideas, doing exactly what you want in the time frame you plan to trade it. Gosh, this changes everything for the right person who takes that time and builds the charts out. Now, here's where it gets really exciting. So I forgot who said it before. I'm sorry, about scanning, right? So actually I want to talk about John first. Thinkorswim 100% can do this. It's a quick custom thing that you can do in like 2 seconds, okay? Tom, absolutely. Now, you might need FinViz Elite, which I think if you pay for the year, it's $25 a month or something along those lines. But here's the big thing I want to get across, okay? So we just kind of broke that down, and we're just going from change from the open. What if we now say, I also only want to take a look at stocks that are positive for the last month? So now we go over here, and you can see there's 221 stocks that meet the criteria right now. If we go in here and we filter above by, let's say, 2%, we just knocked out 60 stocks. So what we're doing now is we are filtering for a big green candle today, and the stock is positive this month by at least 2%. So these stocks that come into the list now are going to be positive for the month and positive today and positive for the week. Can everybody see the power in this and how this makes trading, finding ideas 50 times easier and reduces all of the stress? You are literally setting the software up to give you the ideas that matter to you in that moment. Now, this is why I said before at the very beginning of the call, are you day trading or swing trading? It doesn't matter. And I want to prove that to you right now. This is what's really kind of fun about this. So if we take a look over here and go back into the scanner, we had change from the open, right? And change from the open percentage, and we set it by the day. Well, what if we set this by the hour? What this is now telling us, let's sort this. This is now telling us stocks that have the biggest hourly green candle. So if you are day trading, this is now going to point you in the direction of stocks that have a big hourly green candle. This kind of changes everything, doesn't it? Knowing institutions, knowing that we're looking for order flow, knowing that tape reading is it's doing what we want it to right now, and then having the software tell us these stocks are doing it, and going back to the tape reading question before, when I said building an argument is what tape reading is for us. So now we can add it's positive for the hour, it's positive for the day, it's positive from yesterday, it's positive from last Friday's high, and it's positive for the month, and it's above the moving average. We just put in 5 or 6 different reasons to say that's a stock that should have my attention. And maybe you whittle away 40 or 50 stocks, and maybe there's 10 left. Who cares? Trade the heck out of those 10 doing exactly what you want. So if we kind of go back into that hourly chart, and again, this is a 60-minute chart, and we pull up that scanner again, we go to the next one, Foot Locker. For this 60 minutes, it's up 1.62. Now, this is a different way of filtering it. That's percentage, and that'll bring in a lot of stocks based on percentage. But if you wanted to trade stocks that have a little bit bigger dollar move, not necessarily percentage move, you can see that we changed from the open dollar amount as opposed to percentage for the hour, and that brought up Eli Lilly. So that means right now, Eli Lilly is positive by 2% for the month and has the biggest dollar move this hour. And when we take a look at that chart, you can actually see that the candle is $6 at this particular moment. Can everybody see how we kind of built up to when I was saying trading's a lot easier than you're making it right now? This is what we're talking about, and this is what I challenge you. Spend that 15 minutes, spend that half hour going through your software and saying, where is that? Let me find that. You could do it in TradeStation. You could do it in Thinkorswim. You could do it in TradingView. You could do it in FinViz. All of these things lead up to the software telling you these are the stocks to look at right now because they're doing what you want them to do now. This is kind of exciting, isn't it? Again, I get excited about this because once you get to the other side of this and you start to let the software do the heavy lifting for you, what's your job at that point? Your job at that point is taking losses and learning how to manage winners. That's an exciting place to be, right? All right, so I want to continue. We're going to work our way through some more of the stuff that talking about there. Let's see. Can you tailor that to the stocks in your list on TradingView? Yes. So what you can actually do is, let's say you're looking at this over here, right? There's one of two ways to do it. You see these little flags over here? You can actually right-click on the flag and create a watch list. So you can actually see over here, I have different watch lists that met that certain criteria. So you can choose certain stocks to put into a watch list, or you could then just go stock by stock by stock to trade. But there's absolutely a way to do it in both of them, okay? So I want to continue. I want to keep going. I promise I want to make sure that I get everybody as much good, valuable information as possible. So what we just talked about was separation. So you are literally letting the software tell you that there's energy type separation in the stocks. Now, here's the thing I want to get across, and maybe that was the question. Maybe that was the question that somebody was asking before, but I want to be clear about this. The list I just showed you was a giant list of stocks that kind of got boiled down. But let me ask you a question. What if you did this just in stocks in the Dow Jones? Right? You don't got to be, it doesn't have to be a million stocks. What if you just had one list of stocks and you say, you know what? I'm going to learn that list every day and I'm only going to trade those stocks. I'm going to show you how to do that right now. Okay. I promise we got a lot of good stuff coming your way today. So part of what we're talking about here is having watch lists. So if you can build a watch list of stocks and then sort them the way that I just showed you, you will then have a very tight list of stocks doing exactly what you want them to do. And maybe you might see only a few of these. Maybe out of the 30 stocks in the Dow, maybe only these guys are doing what you wanted to. Great. Leave the other ones alone. Who cares, right? This is the part of trading that it's like amazing. It's like you can have 30 stocks and maybe only four are doing what you want them to do. The software is doing the work behind the scenes. It's pushing them to the top of the list. And then you're just like, okay, I got 30 stocks on the list, but I'm only going to look at those 4 right now. Raise your hand. Isn't that exciting? Doesn't that make trading so much easier? Oh gosh, if you're working hard right now, it's preparation. It's just putting this stuff together to find ideas that make sense. Now, I want to be clear. We're not talking about making money. Making money and managing trades and finding ideas, that's 2 separate skills. But I got to tell you, once you're in the right ideas at the right time, in the time frame that you personally want to trade, then the only thing left over is learning how to make money. And that's exciting because when you have better ideas, when you have energy, when you have institutional demand in those stocks, when you're looking at them, my gosh, you're going to have so many less trades that go like this and drive you crazy and like it's going in your favor, it's going against you, it's going in. When you have better ideas, that happens a lot less. Like raise your hand if that, like you're so tired of that. As soon as you put a trade on, it goes up and it goes down, it goes up and it goes down, and it drives you batty. That happens less when you let the software do the heavy lifting for you. And I just showed you that in TradingView, like the most basic software you can get. You can get really, really advanced when you have better software and more capabilities. Like, for example, Johnny Lash was talking about before, in Think or Swim and in Trade Station, we have more advanced scans where we can tell from separation from the hour, the day, the week, the month, add moving averages, add volume weighted average price, and then it just floats to the top. We're like, oh yeah, I only want to focus on those guys. So if you take a look at this list again, instead of trading that giant list of everything where there's 168 stocks there, maybe you just do the same thing with stocks in the Dow. So you go into your software and you just build a list of stocks in the Dow, and then you sort it the way you want. Maybe you just do it with the Magnificent Seven. Maybe just that big dominant 7 stocks that's moving the market around. You're like, you know what? These stocks are moving the market. Why wouldn't I just pay attention to those stocks right now? And you know what? Let's actually do something fun, because somebody was asking before about that. I actually have a list of stocks, the Magnificent 7 stocks, right? You can see what they're doing today. So if you have custom on FinViz Elite, right, just to kind of give you a really advanced thing here, you put in custom column and you have change from the open. So all you do is you go into your settings and you make sure that change from the open is chosen. And now you sort them by change from the open. And that's it. So now you actually go in here into the charts, and you obviously want to make sure that it's refreshing in real time. And now we're going to be like, okay, which ones are above the opening price and which ones should I be paying attention to? Like that, in a heartbeat. You filter out all of those other stocks, and the software is doing the heavy lifting to find you ideas. Worth the price of admission today? This is only day 1. We still have 2 more days. So again, if you didn't register to be on day 2 and day 3, you got to make sure you click that link in the description for a very important reason, which I'm actually going to put on the screen right now, which is kind of important. I just want to get this out there. It's kind of, let me see. So you got to click that link in the description if you want to qualify for the $6,000 in trading education that we're going to be giving away on Thursday and Friday. You have to be opted in. You have to be in the list, because we're going to email out Thursday and Friday only to those people who filled out that information so that we could send you an email. Very, very important. Okay. Okay. So I want to continue. I want to make sure that we get to everything as much as we can. So does that also help on FinViz? Like, I know a lot of people are using FinViz, right? So we can actually kind of filter this down. So let's, you know what? Let's actually go over to the S&P 500. Take a look at the map of the S&P 500. And we could take a look over here in healthcare. There's two different groups of stocks in healthcare that are strong. So what does that mean? Well, let's go over to healthcare stocks. Let's pull up our list, which is, we have kind of this basic list, right, which pulls up 209 stocks. You can see beta, price, average true range, volume, right? But now we want to take that a step further. And by the way, do you see what I just did? I just, in 2 seconds, I said, let me go and find some place where there's a dominant order flow right now. I'm not guessing. I'm not stressing. I'm not going on Google. I'm saying, show me where dominant order flow is today. And now we're going to filter it the way I just showed you to say, show me the ones that are doing what I want them to do now. So we just looked at healthcare. There were a couple of dominant sectors in healthcare. We're going to go back over here to custom. We're going to sort custom from the open, and we're going to sort it positive. And now we're going to go to the charts. So what we're looking to do now, obviously this is a day trading criteria. You can do the same thing on higher time frames in trading view like I just showed you. But if we drop this down to the 5-minute chart and we make sure that we're in real time, this is going to tell us all of the ideas that have big, giant energy. You think you could have made some money in MDT today? Nice move in the afternoon here. Look at the morning here. Look at DHR here. DXCM has actually been pretty strong recently. Is this helping everybody? I really hope this is really making a big difference, because I care very deeply about whether or not you're succeeding, because trading, for some reason, so many people try hard to explain it, but they make it so much more complicated than it needs to be. Now, again, I want to be super clear. We're just talking about setting up the software today. We're just talking about finding ideas. We're not talking about how to actually make money, because there's all of those distinctions. Remember the stuff that I showed you before on TradeStation? There's a lot more to put on the screen to understand how and when to trade bigger. So, for example, looking at the New York Stock Exchange tick indicator here on the left-hand side, there's not a dominant force there right now, so that would be lower initial position size. The advanced decline is trading down. The VIX is going up. So right now we have a mixed market. So this is kind of important, right? What did I just do in like 3 seconds, maybe 15 seconds? I just analyzed the entire market and came up with what's the right initial position size and what kind of profit target should I be going after. All of that in about 15 seconds. Think about how different your trading would be if you can assess this is the right kind of position size, this is the right kind of profit I should be going after based on what I see in front of me right now. Sometimes it's amazing. And again, belly up to the bar and you hold on a little bit longer. And then there's other times where you're like, okay, maybe a little bit less share size, maybe a little bit of quicker profits, and what we call the momentum profit maximizer, kicking that trade out as well. Okay. I got one more big thing that I want to make sure that I talk to everybody about. So obviously the big thing we just talked about was separation. I want to get to this part over here, because this is a really important part of trading. It's VWAP and anchored VWAP. Okay, these are two very important terms. And if you've never learned about this, this book by Brian Shannon, you can probably put that in there. And you can see his name on the bottom here. He does just a tremendous job of explaining what VWAP is. But I want to explain VWAP and why it's so powerful. So everything that we've been talking about up till this moment has been talking about price action and a dominant side of the market, right? But we haven't added volume yet. Volume is that number that tells us how much money did institutions spend to create that energy, right? That matters, right? We want to know how much money was actually spent and how long was that spent. VWAP, volume weighted average price, tells us the amount of volume, the amount of money that was spent at the average price for that stock in a certain time. So VWAP, volume weighted average price, is intraday from the very first print of the day, telling us how much money was spent and what's the dominant side from an actual dollar perspective. Anchored VWAP could be on any time frame for a swing trade. So I want to show you what that looks like on my day trading charts, and I want to show you that I'm actually doing what I'm teaching you, right? So if we take a look at the screen that I have that I day trade, so this is my TradeStation setup. This right here is VWAP, and you can see in Google. So this is the average price, the volume weighted average price. There's no moving averages on here. This is the volume weighted average price. You can see Google is trading above and below. There's not really a dominant side. It's actually been happening for 2 days, right? So remember what I promised you at the beginning. Having this and using it's not the same thing, right? So now, if you see a stock that can't get any separation from VWAP, it's above it, it's below it, it's above it, it's below it, right? There's no dominant side. But maybe you love to trade Google, but there's no dominant side. Instead of forcing trades, you're going to now look at Google and say, there's nothing going on. Why would I get involved? And then let's go a step further. Now let's go to the daily chart. You go to the daily chart, you're like, oh my gosh, Google is a melted candle. There's no energy there. Why would I get involved? You have melted candle. Can't get away from the average. Versus some of the ideas that we took a look at before, where look at that separation. So here's the average. Here's the separation. The more separation, the greater the energy. The greater the energy for the week. The greater the energy for the month. When you get these kinds of ideas, and again, basically the entry 89 to 90, this is a $4 move in about an hour. Same exact thing on daily charts. Let me show you how to do that. We're going to hop back over to TradingView, and I want to work you over to the daily chart. Now, there's two things I want to get across. The first one is volume. We didn't really talk about volume that much, but something that's super important for volume is you want to put an average of the volume. So we can see here on the bottom is the average. So we kind of go into the indicator, which is volume, and we go into the settings. I have a moving average of the last 21 days, which generally 21 days is how many days are in a calendar month for trading perspective, right? So what do you think this is telling me? What do you think that I am getting out of having the average volume and being able to determine when volume increases? Let's go back to what we talked about before. Our job is to shadow the institutions, to just stick with them as long as they're doing something that we want them to, right? In other words, we want to be a buyer. They're still doing it. Let's just keep following them. Volume and volume weighted average price, or anchored volume weighted average price, tells us that they're also spending money to do that. So there's a significant demand or a significant supply in the other direction. So we see that in two places. We see that on the bottom of the screen based on what is the average volume for the stock. So when you start to see energy candlesticks with volume, you tend to expect follow through. So you got energy candlestick with big volume, energy candlestick with big volume. You got melted candles with lighter volume. You got melted candles with lighter volume. Is that kind of cool? Like we're putting kind of everything together now. Energy candlestick, big supply, pushes down. Indecision, lighter volume, nothing going on. It paused for 2 days. Energy candlestick, heavy volume, pushes down. 4 days of below average volume, goes sideways. Volume increases, it goes down. Volume starts to trade above average in the other direction. You're starting to see how trading can be as hard or as easy as you make it. And the difficulty in trading is kind of adding more and adding more and adding more and adding more. And that makes it really, really tough to be consistent. When you have too many watches on, it's very, very hard to tell what time it is because every watch is going to tell you a different time. Now, the one thing I want to add to that, we looked at VWAP before on the 5-minute chart, and that was for a day trading perspective. But for those of you that are swing trading, anchored VWAP tells us how to hold the trade a little bit longer. And I'm actually going to use a stock that just recently had earnings. Actually, probably a little bit ago. Let me get this off the screen. And we're going to go over to, let's go over to Nike. Because Nike actually, you know what, let's go to Netflix. Netflix actually was a pretty good one. So you can actually see here where Netflix bounced, right? So what we're going to do is we have an indicator. You go into indicators here, and we're going to go to anchored VWAP. So anchored VWAP is going to tell us the dominant side of the market on a swing trade from a fixed moment in time that you choose. So we are now choosing the day of earnings. So again, this is where we kind of get fun, right? Raise your hand if earnings drive you out of your mind. I'm like, I can't guess it. I have no idea what's going on. But wouldn't it be nice if you could trade earnings after the fact with absolute conviction? Well, it turns out you can when your software is set up properly. So that's what anchored VWAP is for. So you can see I actually have it kind of saved on the bottom over here. If you go into your indicators and you go to anchored VWAP, we're going to take anchored VWAP and we're going to anchor it at the day of earnings, right? So we're going to anchor it right there. Oh, hang on a second. Let me get that off of there. We're going to anchor VWAP, bam, right there. And now we actually have the dominant side of the market from earnings. And you can actually see how VWAP and anchored VWAP is rising with earnings. So it kind of danced around. And then once it went back above VWAP here, we had a dominant move and Netflix is following through. It actually broke through this resistance level. So the point of VWAP and anchored VWAP is that taking what we learned before further, which is the basic candlestick setup, the only two candles you need to know, indecision or energy. Energy is when something's going on. I taught you how to scan for energy in whatever time frame you trade. Then I taught you how to scan for energy amongst multiple time frames, the hour, the day, the week, the month. Now we're adding on top of that, are there large volume candlesticks with energy? And then we're adding on top of that, VWAP. VWAP is now telling us there's a dominant side in the direction of those energy candlesticks because there couldn't be a trending VWAP without volume. And volume is the engine, the institutional engine that pushes everything in that direction. And it's our job to piggyback the institutions, which is what makes trading a lot easier. So if you missed that last part before where I went into TradingView and FinViz and showed you how to set those parameters up for the time frame that you like to trade and how to stack and stack and stack another reason and stack another reason, I hope this changes everything for you. Because just go back and watch that part, because instead of being all over the place and confused and overwhelmed and stressed out, you're basically logging into your software. You took the time to set up and you're like, okay, the market's strong today. Boom, find me some ideas that are good ideas right now. And that's the power of having your software set up properly. And then you sort the watch list according to what's going on in the market that day. Now, kind of a really advanced kind of stuff is the setting all of that up in TradeStation, where there's a lot more columns that you could potentially be looking at, both from change from the open perspective and from a percentage change perspective. So when you're really if you want to kind of zoom in on this a little bit, you can see there's net change from the open, from the day, from the month, from the week, from the minute, and VWAP. So you can see when you really start to build this out in an advanced way, the software is literally doing the heavy lifting because you first found an edge. So obviously my edge is order flow stacking and tape reading, and we're going to get a little bit of that into tomorrow. Okay, so we covered roughly 90 minutes worth of stuff today. Do me a favor, type yes if that was valuable to you. We really wanted to make a difference for you today. I really respect your time. Type yes if that was awesome and we opened your eyes up to some easier ways of trading, easier ways to find energy, easier ways to shadow the institutions. Now, again, we haven't talked about making money yet. Today was all about setting up your software and helping it help you to find those great ideas. So again, candlesticks, energy, or indecision. Go look at all the charts you look at now, and you're going to be like, oh my gosh, it was so obvious. Why was I making it so hard? Energy, indecision, volume, and VWAP. If you want to add a couple of moving averages, of course you can. Just make sure that you understand the dominant side of the market is the one thing that matters most. And that's kind of what we talked about today. All right. So again, if you registered for this event, you will get follow-up and you'll be invited to day 2 and day 3. If you have not registered, make sure you click that link in the description to make sure that you're on the mailing list, because we're only sending out the next sessions to people that registered, because we want to make sure we give you extra special attention. Okay. So thank you so much, everybody. I really appreciate it. I'm super happy for you today. Very happy to be here with you today. That's for sure. So again, thank you. Go use everything we talked about today. If you haven't signed up, tomorrow is when we're starting the $6,000 in prizes, and you have to be registered because you have to be on the call in order to be a part of that. So we're going to give that stuff away tomorrow and Thursday. So click that link in the description. Make sure you sign up. Go have an awesome day. Go pour a pot of coffee and get your software set up. All right. Thank you so much, everybody. I'll speak to you soon.